Thank you. Yeah, like you said, a very stacked panel. So we have today, I mean, you can see their faces up on the screen, so very quick introduction. Niels, who is CRO at Tradias and Managing Director at Bankhaus Scheich. We have Jan, who is a partner at EY, focused on digital assets, of course. Alex, who's the head of digital strategy at DWS. And then on the far side, Patrick, who is the Director of EU Strategy and Policy at Circle. So our topic, financial products on smart contract infrastructure. I think it's a very broad topic. We said the same thing in our prep meeting. And I'd like to start with a very quick, like a yes-no question. I know it's hard, but you can only answer with yes or no. I'm just going to go from the front to the back. So do you think that in the future, let's say in 10 years, in 15 years, all financial products will be on smart contract-based platforms? Yes or no?
Yes.
It's really hard. So let's be optimistic. I say yes.
So you said all, right? So then I say no.
Yeah, all sounds a little bit too ambitious, but definitely many.
And I was hoping for somebody to say no, and otherwise it would be a little bit boring. So for the two in the back, so you think we will still have a legacy system in place that kind of bridges this, I would assume. I'd like to start actually with the optimists among us. So if yes, obviously there must be some big benefit to it. So what do you think, Jan, Niels, why this will be the case? So what are we trying to achieve with that? And also what's the benefit of it to, let's say, society as well, apart from only business?
Yeah, so interesting question. And I mean, Christoph in his previous talk, I mean, he explained, I think, everything very well. So I don't think that we will get rid of the existing infrastructure. So as you said, so I don't think we will have a future infrastructure which sits besides the existing infrastructure. So we will see an integrated model, which is, so the existing infrastructure is still needed for certain things. I mean, if we talk about money later on or other type of assets, so we need the existing infrastructure potentially. But of course, the hope is that with blockchain technology, we can enhance this existing infrastructure to make things more easy, to support new business models, to get the efficiencies, cost reduction we are all waiting for. So therefore, I think it's not, I don't think we aim to basically get rid of what we have today and build it new. But I think we will see an integrated world where we have different options and different alternatives, and it needs to fit together. So otherwise, it's a bit ambitious. I mean, Christoph made the comment on the Handelsregister. So really building another layer on top so that we can settle into existing infrastructure. And I think that's also a good analogy for financial markets. And of course, we can discuss this. Yeah, so that's maybe a little bit of my answer, but Niels.
Yeah, so costs is a factor. Settlement times are a factor that it doesn't take like 2 or 3 days until something is settled. Opening the market for everyone is also a topic. For example, when I look to Brazil, for example, they can only buy like what for us it's normal to buy ETFs like the MSCI World or the Nasdaq, but there are countries where it's like a closed shop where you can only buy the local shares. So it makes definitely sense to open it up, and this will open up the market. Plus the topic of fiat on-ramp and off-ramp is also a huge topic. So when we really see like cryptocurrencies, tokenized products like real estate, like twins of shares, or then the real shares, and also the fiat currencies as stablecoins. This will be like a huge win for the society.
I mean, I would agree from the side here. Alex, Patrick, you said not all, so maybe can you tell me which ones you don't think will make it over, which ones you do think will make it over?
Look. I think we usually totally overestimate what we can do within 5 years, and then we underestimate what we can do in 15 to 20 years. And I think 10 years is really a tough time frame, because it might be just the point where we have hit this inflection point, right, where more and more assets come on chain. But we must also not forget that big parts of our current financial system are quite efficient, right? Trading a stock is pretty easy today, so there is no urgent need to bring that on a blockchain. And in particular, of course, since that's an infrastructure game, it comes with a lot of costs and a lot of challenges to kind of move our whole financial system onto this new infrastructure. So if you had asked me 5 years ago, I would have said five years down the road, we will be there. If I look back what happened over the last 5 years, I'm just becoming more and more, let's say, reserved about kind of time frames and when we will be there. I think we will be there, but I won't give you a time estimate whether that's 5 or 15 years. Both can be very true in the end.
That's fair. Patrick, what about you?
Yeah, I totally agree with Alex, and I think with every kind of technology, any kind of product, there's always trade-offs involved. And your question was, will all financial products sit on top of a blockchain in 10 years? That's a little bit too ambitious, I think. And there's also financial products like cash, for example, which are entirely offline, which many of us and many in the crypto space hold very dearly. And I don't think that cash will, for example, no longer exist in 10 years. So there might be there might be some types of assets that we want to rely on existing means, existing infrastructure, etc. But overall, I'm super bullish for smart contract platforms like Ethereum for many, many different types of financial products. If you look at, for example, what we provide as Circle payment stablecoins like USDC or Eurocoin, if you compare that with traditional infrastructure and traditional products relying on that infrastructure, for example, e-money, I think the benefits are quite obvious. E-money, for example, sitting in your PayPal, in your Venmo account is great for payments as long as you stay in that gated, closed network. If you try to send your PayPal e-money to a Venmo account, you start very quickly experiencing some barriers. And I think what global permissionless platforms like Ethereum provide is basically one coherent standard that companies can adhere to, that projects can build applications on top. So that's the key differentiator, I think, the interoperability that it provides and the potential programmability that it provides for projects to build applications on top. And just one example for USDC, for example, which we see as a fundamental protocol for the US dollar on the internet. There is hundreds and hundreds of different projects out there that build applications on top, as for example, a payrolls automation system that uses USDC as a financial product. And they don't need our permission or control over that. And I think that's the fundamental innovation of public blockchains.
But maybe I need to revisit my answer to your initial question, because I understood the question was, do we have financial products on blockchain? And the answer is still yes, because I think, but I'm not saying that all of the products which have been issued or which will be issued are ramped on blockchain. That's not what I said. But I think, I still believe that the industry will try out, like to issue equities, to look at bonds, to look at fund shares, to look at money, different forms of money. And then at the end of the day, it's a question like which of these models will be superior, let's say. And there I fully agree with Alex that a stock which is today traded in milliseconds to replicate on a blockchain is probably not the right way. But I still believe there will be trials where different products will be tried out on a DLT infrastructure. And so that was my answer too.
But what about 24/7 trading? What about trading on Saturdays and Sundays?
Well, the question is, are you solving these issues via blockchain? You still need a market maker who gives you a price over the weekend, right?
I know one.
Yeah, that was I was playing the ball back into your field, yeah. No, but you still need control functions that are live and active on the weekend, right? So, and I think that's a very good that you raised this point, because we very often, and I'm talking to the whole community now, we very often mix things up and we believe like blockchain is a solution for everything. And blockchain is not going to give us 24/7. It's only it's an infrastructure that allows us to exchange value. It's a database, but you still have regulation and control functions that need to be there in order to look at things. So it's very often not a technological problem, but more like a control issue and whatnot.
I think plenty of stuff to go in also in the second part of the panel. I mean, we always talk about financial products here, but we need to think about the services that come with it, the infrastructure that comes with it, and we're taking a look into the future. So I want to kind of bring it back to where we are now. And Alex, you said very clearly, like 5 years ago, you may have had a much more optimistic outlook, and that changed a little bit. So what are like the biggest challenges you've really seen kick in that are kind of maybe slowing down this innovation, or maybe a reason why we're like not there yet, so to say?
Yeah, that's a good question, and I think a lot about that, and there are probably many reasons. I mean, we had a very interesting roundtable yesterday, and I see a couple of people who visited that roundtable, and we were discussing exactly that thing. And I think we boiled it down to 1 or 2 points, and the 2 points I find most convincing is first, at least from a perspective of a big financial institution. Now, if I want to convince, let's say, my management to do a project on chain, they usually ask for 2 things. I mean, the first thing is, can you explain to me what this is all about? That's the first step. I mean, we have to do a lot more education in the TradFi ecosystem. And the second question that usually comes is, what's the business case? And it's extremely difficult to come up with a good business case when we talk about bringing financial assets on chain. So if someone here has a really good one, please get in touch with me right after this panel. I'm interested in that. I totally see business cases for cryptocurrencies, and I could easily come up with a good business case to say, let's let, I don't know, Bank X or Exchange X onboard cryptocurrencies and do crypto business. Then you usually very quickly run into opposition from your control functions in the traditional financial ecosystem, and they usually tell you, do tokenized assets. Right? Then I do tokenized assets, my control functions are happy, and then I turn around to the CEO and he says, where's my business case? So that's kind of the current situation. We should do probably crypto in TradFi, which is extremely difficult because no one is like bold enough to do it. So we try to do tokenized assets, and there we are kind of lacking the business case.
So in addition, I think there is a business case, especially when we look at real estate. It's a huge market which is very, very intransparent. And I think that there's a lot of potential to bring a value add via the blockchain. But regarding your question, 5 years ago from until now, I understand his frustration, because in 2017 everyone was like really, really bullish. Then we had these ICOs which were like 99% scam. And yeah, so 5 years later, now we have a regulatory framework which is really very, very good for institutionals and gives confidence, and people are willing to like work in that regulatory environment. But one thing that is still missing is a working secondary market, and like bringing really liquidity into the products. That's a huge lack right now, which is not solved yet.
Okay, so I think we have business case, kind of regulation, liquidity. I think we could talk about tech as well. So what are technological challenges and trust? Maybe Jan, what are the biggest tech challenges you're seeing? Like, are there any unsolved problems, or are we ready from a technological standpoint?
Yeah, so I mean, maybe also to look at the business case. Why is this on a board level? That's because at the end of the day, we talk about new infrastructure. So, and everyone knows in banking, infrastructure costs a lot of money. It's complex, it's super complicated. So therefore, there's always this kind of anticipation of a lot of investment needed to build this. So I think this is therefore the education part is really important. And
Jan, that's, sorry to interrupt you, that's also the reason why I need to go to my CEO, right? Because we're not talking about a small project within our payments department. We're talking about a huge infrastructure project where basically the board needs to be involved.
Yes, absolutely. And it's always kind of associated with a lot of investment. So I think just a couple of points to add. So what I see is standardization is still not there. I think on the regulatory side, the framework is coming together. We can discuss regulatory issues probably for hours, and we know it's complex. Christoph made really good comment on saying that regulation is also, what I see at the moment, is a little bit trying to replicate in the blockchain world what we have today. So therefore, there's a lot of inefficiency also in regulation. So regulation is still part, but I think it's, when we come to tech, it's standardization. So, because, I mean, we have, if we talk about tokenized assets, we have 10 tokenizers, they all have different standards, they use different networks. So, and now I'm a custodian, I need to do custody for all these tokens, so I need to deal with all this variety of topics. So that's one thing. And the financial service industry generally is not good in coming together to formulate a joint view on certain things. That's the reason why I believe, so I come to the point, to Ethereum, because Ethereum, of course, is a huge ecosystem which has been great in formulating a standardization. So, and to your point on the tech side, so of course there are a lot of concerns skepticism from financial institutions when it comes to public blockchain, which is probably the core what we're talking about on this panel. So therefore we see again like a move to permission blockchains, which I think we have seen in other areas which have failed in the past. So, so the question is, how can we, that was your question, how can we bring these assets on public blockchain? So we need to solve a couple of things. So it's privacy. So, and we need to deal with the anonymity or potential anonymity. So, and what we did at EY, so to come back to your question is, we have been developed together with Polygon, the Nightfall protocol. It's a zero knowledge proof layer 2 rollup on Polygon to actually solve this issue, because what we are concerned about at EY, I mean, we deal with enterprises, regardless whether it's Siemens or it's Deutsche Bank, they all have the same issue. They want privacy and they want certain certainty. So therefore, I think zero knowledge proof technology has not been investigated so much from this institution. And what we did with Polygon Nightfall is that we combined this with the current SSL structure we have in place. So if you have a secure connection on the internet, so both parties need to exchange a certificate, which they need to acquire from an independent party. And that's the concept we have replicated in Polygon Nightfall. So therefore you can identify both parties and you have full privacy via zero knowledge proof, and it's scalable because it's on Polygon.
So secret proof, maybe to also go to somebody who has a company with a very successful financial product running on a public blockchain. What are you must have overcome some challenges in going there as well. What are some of the ones that have really hit hard for you?
Yeah, for sure. And I mean, first of all, I think the benefits are obvious. We don't have to discuss those here in these rooms. I think the global interoperability, liquidity, the constantly upgradable decentralized architecture. So leaving the benefits aside, talking a little bit more about the challenges, I think taking the consumer view and the retail view, I think we are not that there in terms of usability. If you think about the current wallet infrastructure out there, I think most of us agree that, you know, just storing some seed phrase in your house somewhere, that's probably not the way to onboard the mainstream market at the moment. There are some promising developments there, some promising improvement protocols that potentially allow for account abstraction and abstracting away that complexity in the future. So I think usability is one big aspect. Add-on services that every single person here knows and is very familiar with in its bank and securities account, that you get some tax reporting, some accounting reporting. That infrastructure does not yet exist to a certain degree in decentralized finance. So the usability side is very important. Tech scalability and security, I think, is very important. I think we're getting there slowly with layer 2 solutions, etc., to make transactions as fast and cheap as possible. And then there's the entire regulatory discussion, obviously. And we're talking about financial infrastructure here. We're not talking about applications. And so there's tons of questions that arise. There are governance questions, for example, when it comes to blockchain forks. How do you handle that as financial services company on top of that? What happens if the blockchain is congested? How do you react to that? How do you react to market manipulation, to front running on public blockchain platforms like Ethereum? And those are questions that you need very, very strong governance, risk management procedures in place. For traditional infrastructure, you have all those principles for financial markets infrastructure from the BIS, from the ECB, etc. But as you are not in control in this new world of decentralized public blockchains, of the fundamental settlement and infrastructure system, The big question is how can you make the same guarantees and assurances to consumers, to companies building on top of that. So these are all questions that hopefully will be solved in the next couple of years, but they're very tricky.
Can I add a point on the infrastructure? Because I think that's what it's all about, right? We're talking about infrastructure. And now let me start with my TradFi hat on, which I will then take off in a minute. I think from the perspective of a traditional financial institutions, we should really take a very close look at that, because when you look at the financial system today, usually the back end, let's call infrastructure just the back end. So I'm talking about the CSDs, the banks, the exchanges, the payment service providers. That's 100% in the hand of traditional financial institutions, right? I would say the front end, so the interface to the customer, we have, I wouldn't say we have lost that battle, but it's a huge battle with the big tech and fintechs of this world. But back end today is in the hands of traditional financial institutions. If we now move to the crypto world, the front end is already in the hand of fintechs. The back end is at the moment also in the hand of fintechs, right? When you talk about big custodians, we're talking about the Coinbases of this world and not the BNYs and State Streets, right? So that's a battle that's ongoing. And then on top of that, we have DeFi now, which is also the back end, right? And that creates additional competition for traditional financial institutions. Because in the end, I might not even need a custodian because I decide to custody the assets myself. Or I can do market making on my own now. I don't need a market maker. Now I'm taking off my TradFi hat and put the Alex Bechtel hat on, because me personally, that's what fascinates me so much with this new infrastructure, that I can actually, me personally as a retail client, I can become a market maker by simply putting my liquidity token into a liquidity pool. And I can basically profit from being a market maker and earn a return which I am far away from earning in the traditional financial ecosystem today. And this is what makes this technology and this ecosystem so fascinating, in my opinion.
And one thing to add on to that, and I think maybe the final challenge I would like to talk to you guys about is trust. So I think you could maybe say that traditional financial infrastructure had that trust in them. And I know we're talking about a trustless ecosystem, but at the end of the day, you need consumers to trust whatever they're using. And so now we're maybe at the beginning, maybe in the middle, question mark, of a banking crisis, let's say. But I would say we're also not at the point where really the masses, let's say, trust this new technology. So how do we get over that inflection point, especially when it comes to, let's say, financial products? I know a very big question, but feel free to go for it.
Okay, I start. So I think we cannot solve the banking crisis with blockchain, just to be clear on that, and that's my view. So therefore, when I see all these posts like, oh, see all these banks have issues, we can fix this in DeFi. I don't think this is the truth. So, and that's what I'm saying with both hats on. So, so therefore, just to be clear on that one. So, I don't think there's a trust issue in the technology. It's just the way how we use it. So that's just a little bit unclear, and who's in control of it. That's the governance question, Patrick raised. So therefore, the governance question is a key subject, because as Alex is saying, that it's in the hand of them, of the current infrastructure providers. So therefore, it's in the hand of them, it's centralized, it's easy for the regulators to control, it's easy to govern. So therefore, if they open up and bring certain assets on infrastructure which is not in control of them, they need to learn how to adapt to it. And I think, and that's the thing. So I don't think that blockchain technology itself is a trust issue. It's more the way how you use it, and what services and what products you bring on, and what the risk is. I mean, we have seen what happened with SVB, also with stablecoin stuff. And of course, that's a question like, okay, how do you handle these risks, potential risks? So, but I don't think that there's a trust issue with the technology itself. Not as I'm aware of.
I would like to have a look on that from another angle, from the retail angle. And what we always hear or say is like, what do we need for trust? We need education, education, education. This is on the one hand true when we talk about institutionals, but I get, so we are like really in a bubble talking about tokenization, talking about blockchain. When we look at like from the retail view, they don't care about the technology. They just see the front end. They see what they can do, and they will see that they can do other stuff or more stuff or have more opportunities and other services, but they are not asking, do I have it not, is the share that is sent from America to Europe, like, is it an ADR, for example, like in the traditional world? They don't ask for it. So they will also not ask for blockchain questions. They don't care. They just, it must be easy to use, and they should just have the opportunity. And if we come to that point, that it's really a user-friendly, that we really have like user-friendly platforms, people will use that. So from that point, I don't see a trust problem at all.
Yeah, I think it's a complex concept of trust without going too much into detail. I think we have to distinguish between the financial services companies on one side and, as Alex mentioned, the financial markets infrastructure on the other side. I think for the companies, obviously, we're going in the right direction with regulation such as MiCA advancing, and those companies being able to get a public approval, basically separating the wheat from the chaff, and implementing all those standards and practices and governance processes that exist in traditional finance today. I think for the decentralized financial markets infrastructure, both for the underlying blockchain or for DeFi protocols that experienced, hacks on a weekly basis last year, I think the discussion is way more complex, and we're at the beginning of that discussion. Those infrastructure parts of the ecosystem are themselves not able to obviously implement all those regulatory requirements themselves. So somehow the guarantees and the assurances have to be distributed differently. And that can fall on the financial services companies building on top of that. Partly also the nature and the technology of the blockchain potentially can help with that, providing trust, being transparent. So I think that conversation is much more difficult, but I'm pretty sure that we can get there in the next couple of years.
Okay, very quick comment on trust. I think it's very important to think about what kind of trust are we actually replacing by blockchain. I'm coming back to the point I made before, which problem are we actually solving here? So for Bitcoin, that's true. 100% trustless. I can be my own bank. I don't have to trust anyone. That's my own thing. If I'm tokenizing a euro, there's still an issuer of that euro. That might be the central bank. That might be a bank. That might be a stablecoin issuer. If I'm tokenizing a bond, there's still an issuer of that bond, right? So I'm not replacing. I'm not totally my own. It's not totally my own thing if I'm owning a token that represents a euro that's tokenized by Sparkasse. I still have to trust Sparkasse, right? So it's really important to make the distinction between native crypto assets, which I would say are trustless, and anything we try to put onto the blockchain from the real world. It's by definition, in my opinion, not possible to do that trustless. You can maybe use a DAO. That's maybe the most decentralized way in order to do it. I'm not a strong believer in that this is going to happen first. We're first going to have centralized financial institutions putting these assets on-chain, and I will have to trust this institution if I want to use that asset.
What a strong sentence to finish the panel. Thank you, everybody. I think it was quite insightful. And with that, I'd like to give back to Marcel for the next presentation.